There we go. We're live. So we just wait for a few people to jump on. How's things with you, Adam? How's life? How's business?
Yeah, no, it's all good. Thank you. It's feeling pretty busy out there right now in terms of the mortgage world.
The same for the sales market, to be honest with you. It's just been, you keep thinking it's going to stop at some point, don't you? But it just keeps moving on,
Yeah, keeps on. It's surprising me, but yeah, I feel busier than it's been. Like with the stamp duty incentive ending, sort of September, October last year, it doesn't feel any quieter from my end.
No, I know exactly what you mean. Exactly what you mean. There we go. So anyone who's watching live, I think we're on Facebook and on YouTube. Feel free to pop some comments and likes if you can hear us as well. Any questions, we'll try our best to answer them, either myself or Adam when we're live. But also, once we finish, if you're watching this afterwards, please feel free to comment as well. We'll always get back to everyone on those questions. So we've got a couple of things we're going to talk through today. First things, really, we're just going to have a quick review on what's happened in the mortgage industry for this year so far. There's been obviously lots of changes with various bits and bobs. So I think, Adam, you've got a bit of an update for us on that, haven't you?
Yeah, just in terms of market activity, demand is still very, very high. It seems to be, rather than thinking as the year went on, it'll be slightly decreasing each month. It's not. It seems to be increasing. So to give you some figures, there was 1 million mortgage searches in last month, so March.
Wow.
Yeah,
that's a lot. How's that compared to last year, though? Is it up or down, or?
It's up. So despite last year being a real massive year for mortgages and for the property market in general, there was, in March compared to the previous March, the March just gone, 60,000 more searches than were March 2021.
Wow, that's a lot, isn't it? That's an awful lot. So 1 million, and that million searches, is that all market? Is that remortgages, or is it people looking to purchase? I mean, do you know the breakdown, or?
Yeah. So yes. So in terms of the breakdown, so people would think, oh, it's going to be all remortgages. No, not the case. 60%
really?
of those searches were for purchase mortgage applications.
Wow.
Yes, 40% were for remortgages, but still it's very much purchase driven. The market. There are a lot of people out there looking to buy this shit.
And that's what we're seeing on the in the market, in the property market as well, because there's so many buyers looking for properties, and probably similar, the demand is massively outweighing supply, and that's with those figures there. 60% of 1 million searches are looking for a purchase. That's pretty incredible, isn't it? To be honest with you, have we seen numbers like this before? Is this sort of broken records, or is it kind of where we'd expect it to be? Or
record searches? Yeah.
Wow. Okay. Amazing.
A lot of searches, and it is to some extent, it is a lot of it. A lot of those purchases are the first-time buyer market. It's very much
interesting. Again, we're seeing that there's a lot of people out there looking. First-time buyer. People want to move house at the end of the day. First-time buyers have been in renting the last couple of years. They are driving the market forward. So really interesting. Moving nicely onto rates and what's happening. Obviously, there's been so much talk over the last few months with cost of living massively increasing for people, whether it be petrol prices, food prices, energy bills, interest rates are going up. What's happening in the mortgage market, and is there any top tips you've got for people to sort of navigate their way around the interest rate market at the moment?
Yeah, so obviously in terms of the interest rates, I will give you some tips on obviously how to get the best deal for you and what we can do to work around the market. But the crux of it is interest rates have gone up, certainly since December last year.
Yeah.
They have roughly mirrored, so the base rate, the Bank of England has gone up 0.65%, and the average interest rates in that period have more or less mirrored that. Even the fixed rate mortgages wouldn't necessarily be directly influenced by that. They have also gone up with that. What's quite interesting though, a bit of positive news, the gap between a 2 and a 5 year fixed rate has never been smaller. So
really,
it's only 0.15% difference at the moment, which is historically, because they could have been up to 1% difference, maybe more.
And that's on a fixed term, is it?
Yeah,
the difference between a 2 and a 5 year fix is not that much different at all.
Yeah, exactly that.
Wow.
0.15%, which is a record sort of gap in terms of the smallest gap there's ever been.
Incredible.
So basically, the 5-year fixed rate of the main product most people are going for at the moment. They're just extremely good value.
Yeah.
In terms of the average 2-year, let's give you an example of this. The average 2-year fixed rate on the market is 2.86%.
Okay.
That will seem quite high. That's because that's obviously factoring 95% deals as well as sort of the 60% loan to value deals.
Okay.
So the lowest rates are going to be a bit lower than that.
Yeah.
But the average 5-year is 3.01.
Okay. So it's literally not that much difference at all.
No, exactly. So if you're going to potentially comfortable living in your house for certainly a 5-year period, fixed rate might not be might be quite a sensible thing to do for this.
Yeah, no, it sounds like it. Obviously, it's always been the case for me advising clients through my 14-year career, but it sounds to me like it's never been more important to make sure you speak to a broker before you either remortgage or look to purchase a property. You need to be up to date with things because it seems to be moving so frequently and changing literally week on week at the moment, from what I'm seeing anyway.
Absolutely. So if people that might look at products, some customers potentially getting mortgage quotations, the average sort of shelf life of a mortgage product is 21 days.
Wow.
Which
that's really, really low. Like 3 weeks. That's crazy, isn't it?
Yeah, and exactly that. So basically means you see a deal, and if you don't find potentially a house in the next couple of weeks, you'll source the deals you used in a couple of weeks ago. They're simply not going to be around.
So is there an option for combating that? Is there any sort of top tips you've got there hidden away, or?
Yes. So not every lender, but there are certain lenders that will allow you to basically do a decision in principle or a mortgage principle with them. So there's a credit score and affordability check to check that you can actually get a mortgage with the bank. And some of the better lenders will allow you to basically reserve a particular deal for up to 90 days.
Wow.
And if you haven't found a property.
Wow, okay. That's pretty powerful.
It's a massive game changer because if you take, I mean, Ryan, you'll know more than me how long the average first-time buyer takes to find a property once they start looking for a property.
Yeah.
But let's just say it's roughly 3 months.
Yeah.
So that means when they actually do find a property, that they've got a deal locked in, ready and waiting for them. Because the chances are, if they don't do that, don't lock in a deal.
Yeah.
In 3 months' time, say, interest rates could have gone up by 0.5%.
So to clarify on those facts there, then, so if let's say it's a first-time buyer, for example, on a 10% deposit, they speak to a financial advisor or broker, and the 12th of April today, and they go and look for a house. In a month's time, they find a house. If they've only just spoken to someone, haven't done a decision in principle with one of these specific lenders, the rate could be completely different. Whereas if they spoke to you or someone who could offer the same advice and did that today and did a decision in principle this week, that rate will be locked in. So when they do find a house in a month or 2 months or even nearly 3 months, the rate's there. They know how much they're set up for.
Exactly, they're protected.
Seems a no-brainer to me, to be honest with you.
It is absolutely no-brainer. I've been saying to my clients, they're doing this at the beginning of this year with the rates going up. And I'll be saying to my clients that appreciate this deal might not be the lowest deal you'll see, but it's a top 10 deal.
Yeah.
Or it'll be around about a top 5, top 10 deal, depending on the other deals around. But we can't reserve the other deals till you have a property.
Yeah. So the deal of today may not be the deal tomorrow when they find a house.
Yeah.
Really interesting. That's a really good nugget there.
And I'll just say if I'm wrong and interest rates have gone down, you're not
lost anything. Fantastic. I showed Tom's comment earlier. Thank you very much. I know I do look good in pink. I look equally good in my black hoodie as well. And obviously, I'm glad Adam dressed up for the occasion also. But Tom's put another comment on here. There's such a small difference. Why might a 2-year deal be the right option if a 5 year is only marginally higher? What's your thoughts on that, Adam?
Yeah, I would say that 2 years are always going to be popular because they offer flexibility. So with a fixed rate deal, but most products, not just fixed rate deals, there's something called an early redemption charge, where if you try to say whether you take a 2 year or a 5 year deal, you'll be locked in for that time period with penalties if you terminate your deal early. So if you want to move out in 2 years' time, for example, then a 5 year might not be the way to go because you might end up having to pay these huge penalties.
Makes sense. So it gives you a bit more flexibility, really, doesn't it?
They're more flexible, yeah, absolutely. And also another thing, if rates were to go down in 2 years' time, you're not locked into a 5-year deal. You have option to basically go to take an opportunity to remortgage and take advantage of lower rates if rates were to come down in the future.
Yeah, no, it makes sense. Makes sense completely. Okay, awesome. Got another hello from another mortgage broker in the industry, Tom Wheeler. Hi, Tom. Hope everything is well with you. So next topic we wanted to jump onto is we've talked a lot about cost of living, talked about interest rates. Not that it's doom and gloom. There are some positive things to take out of it. But how, Adam, do you think lenders are going to be looking at maybe reducing their risks? Will they be doing it? And if so, how are they going to do that?
Yeah, it's been a bit. So the mortgage market, as we discussed earlier, is buoyant as ever. The lenders themselves have been the most disappointing thing to some extent about doing my job. Obviously, the rates have gone up, but also they are reducing their risk levels. So what I mean by that is, so amounts, salary multiples they've been lending, for years. Now, as they pushed up the requirements to get that borrowing. So, if you give an example, something like HSBC, for example, if you're not earning sort of 75 grand or above, they're not going to lend you sort of 5 times salary.
Wow. Okay.
Nationwide as well, they were doing something called Helping Hand for first-time buyers.
Yeah.
Where they'd lend you 5.5 times your gross annual income. If you're a single applicant, for example, it was £31,000 a year you could qualify for. They've now pushed into sort of the higher 30. I think it's about 37,500 top of my head. They've increased to. So lenders are basically to lending their salary multiples are asking people to obviously have higher income.
And the reason they're doing this is so then to reduce their risk. So if they're just basically saying to clients, you need to earn more money for us to lend you this amount, so basically covering themselves.
Yeah, they're basically selecting more affluent, richer, higher income earners basically to get their what they were lending to obviously people.
Because it's funny how things shift, isn't it? Because you think back to markets in sort of 2014, 2015, 2016, when it wasn't necessarily people couldn't get mortgages, they could. It was the deposit sizes that were the issue for people. And obviously that's when, after the crash from the previous breakdown in 2008, those 95% deals start coming back in. But it sounds now the spectrum's shifting again to say that you need a good sized deposit to get a good rate, and you also need to earn a lot of money to get a good rate.
Absolutely, it does feel like that. So to really push the salary multiples that some banks on paper will lend for income, basically.
There we go. Interesting.
Sorry,
anything else? Yeah. So anything else to add on that point, or?
Just in terms of lenders' risk, and another thing we've seen this week is self-employed. So a lot of banks have always needed a 2-year average for self-employed people, average last 2 years, and that's what the income they would take. But there'd be always some of the high street banks, so Santander being one, use latest year's self-employed figures. This week and kind of said that we're going to need a 2 average now. We're not comfortable doing it off the latest years, which is a real kick in the teeth for self-employed people. Especially
with that 2 years at the moment would also bring into account the 2020 year, which we know was massively disrupted for a lot of people, obviously with the pandemic, etc. So that could cause some issues. What's the best advice, other than speaking to yourself, obviously? What's the best advice for self-employed people at the moment?
For self-employed people in particular, I would definitely recommend getting a mortgage advisor rather than just trying to obviously do a DIY mortgage job yourself, because it is a very specialist market now.
It seems like a bit of a minefield by the sounds of things.
Oh yeah, exactly. You could, if you went direct, you could just end up wasting your own time getting declined. So, for example, Santander, if you don't have a 25% deposit right now for a self-employed person, they're just not going to lend you full stop.
Fine.
Just it's very much before you put your house in the market or you try and buy a house, get a mortgage.
Need to know. Yeah, absolutely. Great advice as always, Adam. Thanks very much for that. I mean, as I said earlier on in the chat, throughout my career, I've always got my clients to speak to brokers purely because it's the best thing for them. It gives them the most advice. One of my mottos, and anyone that's worked with me over the years will have heard me say it probably once a week on average: when there's money involved, you can never get enough advice. And having a trusted broker, obviously, Adam, you and I worked together for I think, 5-6 years now. You've done a mortgage of mine personally, so I can recommend you on both levels. But it's so important to make sure you speak to a broker. How's best for people to get in contact with you, Adam? What's the best forms of communication for you?
We've also got a website, so you can to get my direct number and our company landline and email address off that. You can even download, you can fill in like a mortgage inquiry form off our website as well.
Great. Okay. Well, what I'll do, I think we're pretty much going to wrap it up now. Any comments, if if you're watching this afterwards, if it's not live, please do comment still. We're happy to answer questions. I'll make sure in the descriptions there's links to Adam's website, also his contact number and email address. So if you've got any contact or any questions, anything you want to discuss with Adam, he's there. And likewise for me as well. We're always available. You can call, WhatsApp, email. Links will be in the description. So, Adam, thanks very much for your time. Much planned for this afternoon, or are you all done now? We've got clients to deal with.
Take the pregnant wife to our first scan today. So that's great.
Amazing.
Yeah.
Amazing. You're allowed to tell people, or is that just a bit of a...
I've told my parents and my in-laws, but yeah, not many people.
Okay. You just told the whole of Facebook and YouTube.
Yeah, well,
if people are still watching 16 minutes in, then they know. Well, congratulations on that. But well, best of luck with that. It's always a cherished moment. So, but yeah, obviously we'll catch up soon. Thanks very much for everyone watching. Thank you for the likes. Thank you for the comments. And as I said, if you've got anything else, questions, comments, please do reach out to us. Thanks very much.
Thanks for having me.